Welcome back to my channel. I'm the Gen Z investor, and today I'm going to show you and reveal my $29,000 stock portfolio. So for me, I just started investing about 3 to 4 months ago. So to already have a portfolio of this value is extreme. Most of it is obviously my personal contributions because I haven't had that time for the dividends and the capital gains to compound. But it's a great first start. Heading into 2020, I can't wait to do great things, and I really want to see this portfolio take off. So let's just get started. Let me show you. So as you can see on the top left, my portfolio is called Financial Freedom. I'm showing you this on the Yahoo Finance app. I really like their platform. I really like everything you can do with it. I'm a Canadian investor, so you will see most of my stocks are Canadian, and starting 2020, I will have a larger American sector in my portfolio. So to get started, as you see at the top left, $29,401. To me, that's crazy. That's my value of my stock portfolio, and I'm only 20 years old. And over time, through compounding and capitalized growth, I can't wait to see it just skyrocket. So as you can see, on the day, we have a gain of $12.79. Honestly, barely nothing. 0.04% gain on the day. The market just opened. It's only been open for about half an hour, so it really is nothing significant. My total gain is just around $200, or still less than 1%. The one problem I have with Yahoo Finance is that this total gain does not represent the dividends I've received. So just for example, put in perspective, this portfolio I have contributed of my own personal money less than 29,000, about 28,600, 700, and I'm only at 29,400. So that $200 of gains is just off the value and change in the share price. It doesn't include the dividends that I've personally received and I've reinvested and grown. So we're just going to get started right into it. So because I'm a new investor, and as I recommend to other new investors, I first started with ETFs. I found low-cost ETFs on the market. I didn't want to pick individual stocks. So my big first purchase, my big first holding is VDY. It's Vanguard's Canadian High Dividend Yield ETF. So what this is this holds some of the large, most established blue chip companies in Canada that pay a certain amount in dividends. So for me, this was my first big purchase of around $14,000 when I first opened this portfolio about 3 to 4 months ago, and I have not added anything to it. Only thing that's been growing this account and this asset in my portfolio is the DRIP. So I'm in the dividend reinvestment plan. So this is a monthly paying ETF. So every month, if my dividend payment is significant, it will automatically drip and buy a new share. So I've had this for about 4 months, and I've actually, when I first purchased it, I bought 409 shares. And as you can tell, I'm sitting at 413 right now. So I've actually, each month I have dripped a new share for myself. My second largest holding is Canada's biggest company, and this is Royal Bank of Canada. They have the largest market cap in all of Canada. So this company, I believe, will have the resources to be sustainable over the extremely long term. So I believe I'm investing for a time range from 20 to 40 years. I'm only 20 years old right now, and I truly believe Royal Bank will be a dominant player in the Canadian economy from now up until the time where it's time eventually in the future for me to sell their shares. So for me, I'm a very long-term perspective on investing. I'm not worried about short-term fluctuations in the market. So the fact that, as you can see here, I'm down $152 on my Royal Bank asset, my stock, I have zero worry for me. I plan on holding this so this company's shares goes up to $200, $250. I expect it to double over the next decade, and so on. So for me, it's my second largest holding. I own 45 shares, and I purchased them at $107. Their current market value is only just below $104 a share. So this represents about $4,500 to $4,700 of market value in here. Oh, right here, $4,675 in current market value. My next biggest bank in the financial sector is Toronto Dominion Bank, TD Bank. They have a large Canadian and US presence. They actually get 40% of their net revenue from the USA, which is great to have that sense of revenue outside Canada, so you're not relying on one economy. So they're my second largest bank holding, 15 shares, $1,100 market value. Third holding, Bank of Montreal, BMO Bank, another established dividend paying company. They were actually the first bank ever in Canada, one of the big five. Canada has an oligopoly in the financial sector. We have 5 large banks that control the entire market, and these banks have such a dominant market share, and there's so many restrictions in the government that they almost have a massive moat around these 5, which kind of sets them apart from other financial institutions in other countries around the world. So Bank of Montreal was actually the first ever bank in Canada, and it's actually been paying a dividend for close to 170 years. So Canada's been a country since 1867, which is about 153 years. Bank of Montreal has been paying its dividend longer than Canada's even been a country. So I think that's really interesting. I have a small position there, only $815 market value, but it's still, for me, it's a good start, and I plan on growing that over time. The next sector I'm invested in that does really well with dividends, because they're these massive companies that don't need to retain a lot of their money for future growth. They're able, and they have the funds, and they've already established themselves in such a large perspective that they can afford to distribute a large percent of their earnings to shareholders. Are utilities. These are the companies that every household pays bills to every month, and those are the companies I love to invest in. I like to own the shares of companies that every single month my household is paying bills to, because that just shows that these companies have continuous cash flow coming in regardless of market conditions. People still have to pay their hydro bill and stuff like that. So the first one is Emera Incorporated. It's a utility company in Canada. I own 18 shares. Current market value $54.25. So a total market value for these 18 shares, is $976. My next holding is Fortis, again, another utility company, very popular, very famous utility company in Canada. I own 19 shares, current value at just over $1,000 for that stock. My third utility holding is Algonquin Power and Utilities. This actually has the smallest market cap of my 3 utility holdings, but this is more of a little bit of a growth play along with the nice dividend. So I own 115 shares of Algonquin Power and Utilities, valued at $18.50 a share, for a market value of just over $2,100. And for me, this stock has the growth and the dividend growth that I'm looking for. As well, they pay their dividend in US dollars, and being a Canadian, with the way the currency values and fluctuations are right now, their dividend is actually worth more to me because of the currency, and I'm receiving the gain from the currency. Next stock in my portfolio and in my holdings is Enbridge. Enbridge is an extremely popular company throughout Canada and the United States. They are an oil pipeline company. I own 20 shares, current market value of $51 a share, for again just over $1,000. So for me, this is more of a dividend play and less growth. This company pays around a 6% dividend, which is crazy. I usually keep my dividends between 2 to 4%, but I make this exception for Enbridge. I believe in the management of the company, and I believe they do have the funds and the power to sustain it over the long term. And they do have large amounts of debt on their balance sheet, but they have been doing a good job of minimizing those debt and fixing it over time. So I believe in this company. I believe that my holding will be safe, the dividend will be safe, and it will continue to grow over the near future. CNR, Canadian National Railway, again, another massive, very important company in Canada. This is a dividend-paying company. I own 10 shares valued at $118 a share, so current market value just below $1,200. This is more of a growth and dividend growth play for me. This company only pays, like I said, around a 1.5% dividend. So dividends is very small compared to my previous holding. I just said Enbridge at 6%. But for me, the growth on this company will come from both capitalized gains and the little dividend increases along the way. Second to last is my last big sector is the telecom sector. So in Canada, we have 3 major telecom companies: Bell, TELUS, and Rogers. For me, I decided to own those 2 of the 3, Bell and TELUS, only because Rogers doesn't have the best dividend history. They haven't been increasing their dividend every year, and that's not what I look for. One of the important things for companies in my portfolio is that they increase their dividend each year. So for me, Bell and TELUS hit that. So I own 15 shares of Bell, last price around $61 for a market value of $915. And my last holding is TELUS. I own 17 shares of TELUS, current share price around $50, again for a market value of $850. In my portfolio as well, I have $235 in cash. Some of that's from dividends, some of that is for like extra money I contributed, and currently that's just sitting there in cash. So there you go. Those are my holdings in my current stock portfolio at a value of $29,400. This is great for me. I am a beginner, and just to watch this, and I have a plan, such a long-term outlook on this portfolio, to watch it grow over time is going to be great. I can't wait to see this portfolio hit 50,000, 60, 70, 100, and so on and so on. For me, if you just watch my previous video, I talked about my goals for the year 2020, and one of my goals is to get this portfolio hit $50,000 mark. I think it's possible. It's going to be a little tricky. It's going to force me to be really focused on this portfolio and really pay attention to everything that it's doing. By the end of year end 2019, I plan on getting this to close to around $30,000, as close as I can. And then start 2020 with a portfolio of around $30,000. Each month, I'm going to make future videos to update you on the progress, my dividends received, so on and so forth. So there you go. That was the first ever video. I went through all my holdings with you. I showed you what I'm holding in this portfolio, why I'm holding it, and from there, each month and every couple weeks, I will be updating you on different buys I make, different sells, and whatever adjustments I make to this portfolio in order to keep it growing at the rate I want. I'm a somewhat conservative. I'm not into super risky plays. I don't do options tradings. I don't borrow on margin. It's all my money for the future, for my retirement and financial freedom later on. So thank you for tuning in. I'm the Gen Z Investor. Subscribe to the channel if you want to learn more and follow me along my own journey. Thanks.